Morning, everybody. The July 26, 2018 Veterans Land Board meeting will now come to order. First item on the agenda is approval of the minutes from our last meeting on April 26, 2018. After the board has had a chance to review and assuming no questions, comments at this time, I could entertain a motion to confirm said minutes.
And I've taken a look at the minutes, and I will make a motion to confirm.
I'll second, and the motion carries unanimously to approve the minutes. Next item on the agenda is number 2, as stated. Forgot to welcome Jeff.
Thank you, Mr. Chairman. Members, for the record, I'm Rusty Martin, Chief Investment Officer. Approval of this agenda item would constitute your approval of the issuance and sale in one or more series or installments of up to $250 million in tax-exempt new money general obligation bonds in the Housing Assistance Program in 2019. This is one of 3 items on the agenda that we have on the agenda once a year, in which you delegate authority to staff to handle these transactions. This is the first of those 3. Just by way of summary, in 2017, you approved a 1-year resolution authoring the issuance of up to $250 million in tax-exempt new money general obligation bonds in the VHAP during the 2018 calendar year. Subsequently, we closed on the $250 million Series 2018 bonds in June of this year. As you know, the program is limited to federal tax law to no more than $250 million in new issuance per year, and demand is such that staff continues to expect to issue $250 million per year for the foreseeable future. Therefore, it's time again for the board to approve a resolution authorizing the issuance of up to $250 million in tax-exempt new money general obligation bonds in the VHAP during calendar year 2019. Again, as a reminder, the bond issues are typically structured as synthetic fixed-rate term bonds, which we create by issuing variable-rate bonds that are effectively converted to fixed-rate bonds through the use of floating to fixed amortizing interest rate swaps. Except for 2009 and part of 2010, the board has used this structure in virtually all of its new money transactions over the past 16 years, consistently allowing the board to achieve a true interest cost on those bonds that averages about 125 basis points below the true interest cost that would have been associated with a traditional tax-exempt fixed-rate housing structure. Therefore, I'm recommending that you authorize the issuance of up to $250 million in tax-exempt new money general obligation bonds in the Veterans Housing Assistance Program from July 26, 2018 through July 25, 2019. In addition, I recommend that the bonds' final maturities not exceed December 1st, 2050, and the bonds' true interest cost not to exceed 5%. Again, this is an item that you have approved annually for several years. I'm happy to answer any questions.
Hey, Rusty, is the cap and the recommendation at 5% the same cap that was recommended last year at this time?
Yes, sir. It's just an arbitrary cap. The board has to set a final maturity date not to exceed and an interest rate not to exceed. So that gives us plenty of room. The actual TIC on the bonds we just did was somewhere around in the 2% range, so we've got a lot of cushion there.
All right, I have no questions. I'll make a motion to approve this item.
The motion is seconded and carries unanimously to approve item number 2. Next item on the agenda is number 3.
Thank you, Mr. Chairman. Members, approval of this agenda item would constitute the board's annual renewal of its authorization for staff to execute certain interest rate swap transactions upon notice to the chairman and the chief clerk for a 1-year period. As you're well aware, financial markets continue to be volatile over the past year and are likely to remain so in the future. However, those volatile markets often create very attractive, if somewhat fleeting, opportunities for entities that are sophisticated, experienced, and well-positioned to take advantage of them before they're arbitraged away by other market participants. However, the board's quarterly meeting schedule is not really conducive to executing quickly upon attractive market opportunities before they disappear. In recognition of this problem, the board authorized staff beginning in January of 2009 to execute interest rate swap transactions as attractive opportunities may arise upon notice to the chairman and the chief clerk for rolling 1-year periods. It has not been necessary over the past year for staff to utilize the delegation of this authority. to execute any swap transactions between board meetings. However, staff strongly believes that the annual adoption of this resolution will continue to provide us with a powerful tool that affords us flexibility necessary to take advantage of short-lived, attractive opportunities as they arise. Therefore, I recommend that you authorize staff to enter into, execute interest rate swap transactions upon notice to the chairman or the chief clerk for a one-year period, beginning July 26, 2018, and ending July 25th, 2019. And again, this is one of the three authorizations that you typically review and adopt each year. I'm happy to answer any questions.
Any questions at this time?
How long has this been in place, Rusty?
Excuse me?
How long has this policy or this authorization existed?
This one has existed since 2009.
Okay. And it's just something that we annually approve, and how often do you all actually act under this authority?
We haven't actually had a situation in the past few years that we haven't had a situation in the past few years where we've needed to execute this, because this is typically related to opportunities that may come up because of a dislocation in the market or an anomaly. We're doing a swap every year, but that's covered under the routine bond resolution, so it doesn't really fit under this resolution. So it's just a matter of if an opportunity arises. I believe the last time that we executed it was in 2012.
Okay. All right, I have no other questions.
I'll move to adopt the recommendation.
I'll second it.
Motion is made, seconded, and carries unanimously to approve item number 3. Next on the agenda is number 4.
Thank you, Mr. Chairman. Members, this is the third of the annual approval items. Approval of this item would constitute renewal of your annual authorization for the substitution of existing liquidity facilities or the entrance into new liquidity facilities associated with existing or new bond issues in the Veterans Housing Assistance Program and the Veterans Land Program, as well as the authorization of any amendments of any associated resolutions with those bond issues. In keeping with past practices, the board approved a resolution in July of 2017 that authorized staff to substitute over a one-year period as necessary various liquidity facilities provided by various liquidity providers on existing VLB variable rate bond issues, also to execute new liquidity facilities related to any new bond issues during the one-year period, and to amend or supplement the resolutions associated with any of those bond issues. Since that time, staff has arranged a $500 million liquidity facility with Federal Home Loan Bank of Dallas, and we used approximately $200 million of that facility to substitute on 2 existing VLB bond transactions, and used another $250 million of that facility to provide liquidity on the recently issued Series 2018 bonds. Taken together, these 2 transactions are expected to save the board approximately $3.2 million in liquidity fees over the 5-year term of the facilities. Although it remains difficult to find large creditworthy institutions that are willing to provide liquidity at a reasonable pricing, we still expect to meet projected liquidity facility needs during the next year at reasonable pricing, primarily due to reputation on the street and the strength of our AAA credit ratings. Therefore, I'm recommending that you authorize staff to substitute existing liquidity facilities or execute new liquidity facilities for a one-year period from July 26th of this year through July 25th, 2019, and to amend or supplement certain existing bond resolutions to accommodate such substitutions as necessary during the period. Again, this is the third of the 3 annual authorizations. I'm happy to answer any questions.
Any questions this time?
No questions here. I'll move to approve this.
Second. Motion is made, seconded, and carries unanimously to approve item number 4. Next item on the agenda is a non-voting item, number 5, as stated.
Thank you, Mr. Chairman, members. So item number 5 is something we place on the agenda every time, at least for discussion, possible action. It's just a review of interest rates in the Veterans Housing Assistance Program. I'm not going to recommend any changes at this time. I would point out that since we replaced our servicer, master servicer, and loan originator late last year, we have now recovered to what I think is 100% of normal demand in the program. which I typically define as somewhere between $500 million and $600 million a year. So we're back in that range, both on the rate locks that have been issued and now on the monthly loan purchases. So the program is back where it should be. It's working as it's supposed to, and I'm not recommending any changes at this time, but I'm happy to answer any questions I have.
I don't have any questions.
No questions at this time. Next item on the agenda is number 6.
Thank you, Mr. Chairman. Members, this also is a non-voting item. We place it on the agenda at the request of the state auditor so that you can have a picture of the investment portfolio. Just briefly, this is for the period ended March 31st, 2018. First quarter, U.S. GDP increased at an annual rate of 2%, and that was after increasing 2.9% in the fourth quarter of 2017. And the unemployment rate ended the quarter unchanged at 4.1%. The Fed raised its target Fed funds rate range. It was at 1.25 to 1.5. They raised it to 1.5 to 1.75. That was at its March 2018 meeting. They also continue to tweak what they call their balance sheet normalization program, and it has to do with how they reinvest principal payments, repayments from maturing Treasury securities and agency-backed securities. So they have voted to increase those thresholds again in March. They did it in December. So really what they're doing is slowly sucking the liquidity out of the market, which, as we all know, is going to have an upward pressure on interest rates. They continue to expect that economic conditions are going to evolve in a manner that's going to keep interest rates low for quite a long time. But they track the path of the data continually, and they will, the path of the Fed funds rate is going to depend on the economic outlook. So we will stay tuned to that. Obviously, they have telegraphed that they are leaning towards raising rates, a series of rates. They raised in March. I expect that they will raise probably at least once more this year, maybe in September, possibly twice. So we'll just keep an eye on them and see what they come up with. Our investment strategy is focused primarily on providing liquidity and cash flow that we need to meet loan demand and make debt service payments while still preserving principal. And we do that through the investment of high-quality investment instruments. Portfolio's duration increased during the period from 4.22 to 4.7 years. Our target is 3.5 to 4 years. That will be quite volatile. And looking at the performance itself, if you go to the third page of the report, the total return for the quarter was down slightly and roughly 9 basis points compared to 2 basis points up on the benchmark. So relatively flat performance for the portfolio and against the benchmark. That was for the quarter. 1-year total return, however, is 1.454% versus 0.37% on the benchmark. So still healthy outperformance of the benchmark. Yield to maturity at the beginning of the quarter was 2.09%, was 2.65% at the end, which reflects upward pressure on rates primarily through what the Fed's doing. That is the end of the report. It's a non-voting item, but I'm happy to answer any questions you may have.
Any questions?
No questions here?
That being a non-action item, we can move to the next item on the agenda, number 7.
Thank you, Mr. Chairman.
Thank you, Rusty.
Good morning, Mr. Chairman, members of the board. For the record, my name is Charlotte Mumford. There are no appeals to the board today.
There being no appeals and this being a non-voting item, next item on the agenda is number 8.
There were 14 tracts offered during the forfeited land sale online bidding period of June the 8th, 2018 through July 24th, 2018. We received a total of 93 bids, resulting in 10 high bids. Staff is requesting that the board award all high bids that meet qualifications for the land program. I will be happy to answer any questions you may have.
questions at this time?
I have a general question about this program, and that's that this is a blind bid, right? People put in their bids, and they don't know what other people are bidding, and they just bid their best amount, and they hope that it comes through, right?
Correct. We do post the minimum bid amount,
Uh-huh.
and that information is available to all bidders.
Okay, and then they choose how much over the minimum bid amount they want to bid?
Correct.
Okay. All right, no questions.
Can I entertain a motion to confirm the recommendation?
I'll make that motion.
Seconded. Motion carries. Next item on the agenda is number 9 as stated.
Staff is requesting that the board take forfeiture action on the resolution before you, except accounts where sufficient funds are received to avoid that action. 13 accounts are being presented for forfeiture action today. I will be happy to answer any questions you may have.
Charlotte, what's the, there's one person on there, the Rfp estate, that has 69 delinquent payments?
That
Is that
person
a-
has been in bankruptcy,
Okay,
and so while they're in bankruptcy, their delinquency is rolled into, they make payments based on what the trustee has outlined.
I see. Okay, I have no questions. Is this a motion that I need to make?
Requires a motion to confirm
Okay, I'll make that motion.
the action. I'll second. Motion is made, seconded, carries unanimously to approve item number 9. Next item on the agenda is number 10.
Staff is requesting board take action on the resolution before you. The resolution lists accounts to be considered for order for sale action today. There are 9 accounts will become tracks for the next forfeited land sale. We're requesting that the board's authority to pull any track that may fully reinstate prior to the sale date. I will be happy to answer any questions that you may have.
I have no questions. I'll make a motion to approve.
Seconded. Motion carries to approve item number 10. Next item on the agenda is number 11.
Staff is requesting that the board set the next quarterly electronic forfeited land sale bidding period to begin September the 4th, 2018, with a bidding deadline of October the 23rd, 2018, at 5 p.m.
I'll move.
Seconded. Motion carries. Next item on the agenda is number 12.
Mr.
Thank you.
Chairman and board members, before the staff presents on this, I just want to make a note about the next 4 items, 12 through 15. Those maybe not, you may not have seen or previously recall seeing renewal of contracts on the agenda. Recently, Sunset Commission made some recommendations, reviewed both SLB and VLB. One of the recommendations for VLB was directing VLB and staff to develop some policies moving forward on what contracts, particularly large contracts, would be considered and approved or disapproved by the VLB, and which would be left to the delegated to staff. Even though those recommendations by Sunset have not been finalized, and they've not gone to hearing, and of course we have no policy. Speaking with the chief clerk, we thought it would be good to be proactive on this and to present these more significant contracts to the board for consideration. So that's what these next 4 items, 12 through 15, and are and why they're on today's agenda.
Appreciate that, counsel. And just for our edification, is there a certain threshold on these particular contracts that are presented versus others?
Well, with respect to what the recommendations of Sunset, they said a monetary threshold of at least $1 million. I don't recall if all of those are that, but these are significant contracts. We felt that, and since we haven't developed a policy, we haven't flushed out. Some things may be less than $1 million, but could still be significant to the program. We would ask, staff would of course want time to develop that, but these we felt, talking to Chief Clerk and I felt this would be important to bring these to the board.
If we weren't to approve this today, then I imagine that would have some impact on these contracts, and it would be detrimental to our operations, right?
That is correct.
And are we going to be able to hear a little bit about these contracts?
I believe staff is prepared to discuss the contracts today.
So to that end, let's start with item number 12.
Thank you, Mr. Chairman. Members, for the record, Rusty Martin, Chief Investment Officer. So I'm going to do items 12 and 13 for you. The first one is a consideration and possible action on the renewal of contract number 0812100001263 with Dovin Mule Mortgage Incorporated. Approval of this agenda item would constitute your approval of the renewal of the existing contract with Dovin Mule, which I'll call DMI, for 10 years at an estimated cost of $1.2 million per year. As you may or may not recall, DMI provides servicing and master servicing for the loans in the Veterans Land Program. This contract relates specifically to the servicing and master servicing of land mortgage loans in the Veterans Land Program. We also have another contract with Dovin Mule, which is not up for extension at this time, which covers the old contract for deed program. This original contract with DMI was also a 10-year contract, and it expires on August 31st of this year. They have performed well under the existing contract, and they've proven to be a good partner to the VLB and to Texas veterans in delivering its services. Therefore, we're recommending that you approve the renewal of the existing contract with DMI for another 10-year period at an estimated cost of $1.2 million per year. I'm happy to answer any questions.
Rusty, do we need to go out and solicit bids for contracts? Is there some type of regulation that would say that we can't renew these contracts without doing another solicitation of competitors' bids?
That's not my area of expertise. I can't answer that question.
Anthony Vargas, Office of General Counsel. Generally, yes, there are solicitation laws and procedures that we follow. Those laws do build in some flexibility at the discretion and advice of counsel as to what the contract period should be. So the current guidance out there from the comptroller says that contracts should not extend for a period of more than four years. However, there is a caveat that is not a one-size-fits-all provision, and that each agency should consult with their counsel regarding contract's terms. With this particular contract, there was an initial 10-year term in the initial procurement, and by the terms of the contract, there is allowability for an additional 10-year term, provided that we issue a notice of intent to DMI within a specific time period. So we've taken that step to issue that notice of intent to renew for that 10-year period. And we're now taking it to the board for that particular 10-year period, which we originally procured for. So on this particular contract, yes, the procurement is fully executed, and we are now just complying with the terms of the contract.
Do all the terms of the contract remain the same?
All the other terms of the contract will remain the same. The only thing changing here is the expiration date.
I can't speak for other members of the board, but just as a general matter, when we have these big contracts that are coming up, it might be helpful to get a little bit more lead time just so that we can examine what's inside the contracts, and so that we could get what I think needs to be a little bit more definitive in an answer about whether or not we need to do some more solicitation of bids.
Absolutely, and we will be happy to build that into the policy that Mr. Gordon alluded to, that is currently in process.
Do we know when that policy will be established and presented to the board?
That will be based upon the final recommendations of Sunset. As far as the timeline for them actually issuing their final report, we don't know when that will be coming out, and this may fold over into the next later session, so early 2019.
I would agree in terms of a renewal of an agreement exceeding, in this case, 10 years, that, we should probably have a little bit more lead time, and I wouldn't have objection to having an additional meeting before August, it appears August 31, 2018, to let Devin Mule know, considering we don't have the full body or the full board here. But to get additional lead time would be of assistance,
Of course.
as we develop the policy pursuant to Sunset's
I
recommendation.
mean, right now, what Sunset, so Sunset, we have our responses due next week, the 2nd. Sunset hearing, actually before the Sunset Commission, is the end of August. and then if the Sunset Commission agrees to adopt the recommendations of of Sunset, then right now what they're saying is the board should adopt these policies by December 1, 2019. That's not, we obviously we'll be working on that well before then, but that's, in terms of what the date the Sunset is saying is December 1, 2019.
So we have roughly a month until this contract expires, right?
Correct.
At which point,
Or the notification period, correct? To
No, the notification period has already passed. That was February 28th of this year. So we did provide the notice in a timely manner, and now we're heading into this contract expiration period unless we head it off with a renewal.
I'm not against knowing not much about the particular terms of the contract, I'm not against the contract, and I hope that, Devin Mule doesn't, consider a reluctance to vote on this today to be, thinking that we're, reconsidering the terms of that contract. I think it's more just a general matter of being informed about what we're voting on.
Of course.
Is the position that I'd like. And, from a practical standpoint, what impact would setting up another meeting a week or two from now to be able to vote on these contracts, what impact would that have practically on the relationships that we have with those companies?
From the legal process side, I believe it would be a minimal impact, but Rusty can speak to the actual relationship with Devon Mule.
I don't think that there would be any negative impact to the relationship by delaying a vote. From their perspective, and given the speciality of the specialization of these types of services, when we entered into the contract, this was envisioned as a contract for the life of the land program, as long as the provider provided the services that were required in a manner that we required. Because contracts like this require a tremendous upfront allocation of capital and resources on the part of the entity we're providing or entering into the contract agreement with. So without those assurances, that it's going to be a long-term arrangement, they're not going to want to enter into the contracts anyway. We have a good relationship with them. I don't think that this would affect the relationship at all. But if the decision were made not to renew the contract, then that would have an impact because, first of all, there would have to be some temporary extension arranged because you can't replace a service, or you can't just go out and call somebody and replace them. It took us, that's what we did in the housing program, and it took us almost a year to do that. So the answer to your question is, if you need some more time to consider the contract and you want to see more details about it, that's fine, as long as we get it approved before it expires, or we come up with a temporary extension on the contract before it expires. There won't be any damage to the relationship. We have a great relationship with them.
Well, just to reiterate I think my position on some of these big contracts would be, not that we don't want to continue the relationship, and certainly I don't want to bring any harm to that relationship, especially with what appears to be a very productive thing. This is just a matter of how we proceed as a board going forward, and that when we get these big considerations, hopefully we would get a little bit more briefing on it and have the contract in front of us so we could do a little bit more due diligence instead of, the alternative. Understood. But, Commissioner, do you have any thoughts?
I do. I think I have a similar position. The timing of the Sunset's conclusions and recommendations, with us being proactive on approving contracts of this size, just led to a difficult decision today. I would move that we continue the contract, but have no objection at all to having a meeting in lieu of a physical meeting. We can do it telephonically. And ask Mr. Moody to take an additional look, and all three of us can move with the utmost speed on it. We can resolve in the next week to review the agreement. We could even do it by tomorrow, just have 48 hours. But so I'm okay with tabling this issue for right now, just because of the size of it and the length of it. And then let's move alternatively with all utmost speed. And if Devon Mule requires communication as of the moment of this board meeting, that we let them know that we explain to them the situation with Sunset Advisory and us being proactive and the board approving agreements over a certain size and over a certain length of time.
In that case, a motion to table the matter would be in order.
Would be required. Thank you, council. So moved.
I'll second it, and I would just request additionally that we set this meeting for sometime next week, if possible,
Okay.
so that we could have the weekend to take a look at these contracts. We, can
Of course, we'll have to comply with the Open Meetings Act notice requirement, so that's about a week notice requirement that we're required to post.
okay, great.
Appreciate it. Next item on the agenda is number 13.
Mr. Chairman, members, for the record, Rusty Martin, Chief Investment Officer. This item is consideration and possible action on the renewal of contract number 14142000879 with BLX Group, LLC. Approval of this agenda item would constitute your approval of the renewal of the existing contract with BLX for 1 year at an estimated cost of $50,500 per year. BLX is a specialized group. It used to be a division of Oric Harrington that spun out several years ago. They provide arbitrage rebate calculations and loan yield analysis. It's necessary to comply with federal tax law limits on arbitrage you can earn on tax-exempt bonds that we issue in the Veterans Housing Assistance Program to make loans to veterans. The existing contract expired on August 31st, 2017, but it was extended for 1 year, and it's now expiring on August 31st of this year. BLX has performed well under the existing contract and is a good partner. We're recommending that you approve the renewal of the existing contract with BLX for 1 year, as I said, at an estimated cost of $50,500. Happy to answer any questions.
This fits into what I think might be a different category than Devon Mule, only because the term is so short. It's 1 year, and it's ultimately $50,000. So I don't know that I would categorize this the same. Commissioner,
Agreed.
your thoughts?
Yes,
I mean, I'm fair proceeding on this,
As am I, so I will move.
and I'll
For that.
second.
Motion is made, seconded, and carries unanimously to approve item number 13. Next item on the agenda is number 14.
Thank you, Mr. Chairman.
Thank you, Rusty.
For the record, I'm Bill McLemore, the Deputy Director of the Loan Programs. This agenda item 14 is consideration and possible action on the renewal of contract number 172820000, consideration and possible action. The purpose of this action is to consider and act on the proposed contract renewal to maintain what has been essential and effective loan origination software provided by Mortgage Builder Incorporated. Mortgage Builder was acquired by Altisource, and it supports both the land and the home improvement loan programs. The original contract was awarded to Mortgage Builder through an RFP and became effective August of 2007. That contract expired on May the 1st of this year, 2018. Currently, VOB is on a month-to-month basis pending approval of your consideration and hopefully approval of this contract extension. There are no substantive changes to the current existing contract in terms of the unit price schedule. Our recommendation is that the board approve the contract renewal for the period September the 1st of 2018 through August the 31st, 2020.
In my mind, this kind of fits into the middle ground on the spectrum between the 1 year and the 10-year, and so you guys are challenging us with everything.
This is
Splitting hairs here.
example of why we need to develop a written policy, because there are such unique issues for each of these contracts. But
Do y'all like the software?
I'm sorry, sir.
This is for a software contract, right? This is the software that's essential to.
This is simply a software contract right now. Loan origination, and that software has been developed and changed over a period of years to be adapted specifically for for the land and home improvement loan programs for loan origination. It'd be difficult for us to find somebody else that would be able to do that and then train the staff on that. It takes up to 6 months to get a staff trained.
Well, that was going to be my following question, Bill, is what would be if you had to speculate on what the ancillary costs would be if you had to switch platforms? What do you think in terms of labor or expenditure?
Part of our problem is there's just nobody else out there that'd be able to deliver a product just like this for us, for competition.
Okay. Well, in that case,
And just to be clear, the recommendation is just a 2-year extension, correct?
2 years,
From September 1, 2018 through August 31, 2020?
2020.
Okay. And before this actual agenda item, it was renewed on a monthly basis?
Yes, sir. It's currently just month to month.
I would feel comfortable proceeding and voting on this today, but if you'd like more information, Commissioner.
I think I'm comfortable.
Okay.
I think I'm comfortable.
All right, well,
I'll move.
I'll second.
Motion is made, seconded, and carried unanimously to approve. Next on the agenda is number 14, or 15, I'm sorry. Thank you.
Good morning, Mr. Chairman and members. For the record, my name is John Berkeley, Deputy Director for the Texas State Veterans Homes. Before you for consideration and possible action is a renewal contract for number 16-194-000-9598, Omnicare Pharmacy of Texas, doing business as Omnicare Fort Worth. The purpose of this contract is to review and approve, hopefully approve, the renewal contract for pharmaceutical services for Omnicare, a commercial pharmacy, as required by our VA contract. The original contract was awarded through an RFP that began in February 25th of 2016. The contract expires August 31st of 2018. The original value of the contract was $8 million, but due to increases in medication costs and a 30% increase in the number of 70% service-connected residents, an additional 1.7 was added to the contract this year. A renewal contract carries a value of $12.5 million. This contract reflects the cost of medications for our 70% service-connected disabled veterans, first dose medications for veterans receiving aid and attendance, Medicare A, and emergency medications. Under the contract renewal, we did negotiate a larger reduction in the cost for our generics. The average wholesale price went from 70% reduction to a 75% reduction. Our recommendation is that the board approve the 3-year contract renewal beginning September 1st, 2018 through August 31st, 2021. Happy to answer any questions.
What would you say the percentage of pharmaceuticals purchased wholesale generic versus wholesale is?
The vast majority of our medications are generic. Where we see a lot of the name brands are primarily for the service-connected, and their specialty meds, of course, they carry the highest percent. The average 70% veteran, 11% of their daily rate goes towards their medication costs.
Okay.
And are there other providers out there?
When we did the RFP, we only had two companies respond. We had Farm America since the inception of the program. And when we did the RFP, Omnicare came in, offered a better rate, and they've actually improved that rate going forward.
Okay. When was that RFP issued?
It was issued, the original RFP was awarded in February 25th, 2016. That's when the contract was signed.
All right.
In the language on details, original value of the contract was 8, but due to increases in medication costs and a 30% increase in 70% service disabled results in an additional 1.7 million. What would you say the breakdown is within the 1.7 million in terms of medication costs versus the increase?
It's almost a direct reflection in the number of service connected that increased. That was the increase in the 30%. We had a 30% increase in the service connected, and that with that value, it actually equated almost the 1.8 that was, or the 1.7 that was added.
What is, it says that the original value was 8 million.
Yes.
But 1.7 million was added earlier this year, so I bring it to 9.7.
Right.
And then the renewal value is 12.5.
Right. We are anticipating, we're continuing to see over the months and over the years an increase in the number of service connected, and that's what it's reflecting, but there's also the increase of medication inflation. Pharmaceutical companies are selling what were generics to other companies. They're remarketing them and bringing them back as primary medications or first-class medications.
So under the terms of the new contract, it says average wholesale price, 75% plus.
Minus 75% of the cost, plus a $1 dispensing fee.
So we're actually getting, like, on a per-pound basis, for lack of a better term, a better deal.
Yes,
On the wholesale, but not necessarily on the...
not
I'm sorry,
on the brand,
On the generics,
no. Just on the generics.
just on the generics. Correct, yeah.
What is that plus $1? What is the impact of that plus $1 on the scale that we're talking about?
Well, that's for every script that is ordered, there is a dispensing fee from the pharmacy. It's a handling charge, delivery charge that goes with that.
If possible, since we're already tabling one for next week,
Yeah.
I wouldn't mind tabling this as well and getting a little bit more briefing on it and a little bit, seeing the contract itself.
Okay, appreciate that very much.
But,
So moved. I'll move to table.
all right, I'll second.
All right, thank you.
Motion is made, second and carries. Next item on the agenda is number 16.
Good morning. Once again, Anthony Vargas, Officer General Counsel. This is an update and additional information on the tire tract in Coryell County. If you'll recall, in April of this year, the board approved a $2.899 million contract to clean up the site. Contract negotiations lasted through the month of May, and on June 11th, we had the kickoff meeting at the site. TCEQ was in attendance, as was County Commissioner Matthews, the county EMC. All of our contractors were on site, and subcontractors were on site. And we had a meeting to go over the basic details of the project and to do some planning. After that meeting, within the immediate next 2 weeks, the contractors constructed the new gate and entrances and exits. So you now have a north entrance and a south exit gate. And they constructed a work pad of approximately 500 square feet for them to bring the tires in from the back of the field for processing. They constructed roads and fire breaks around the existing tire piles and put in necessary fire breaks and removed all the brush. As of Monday, 172 tons were removed from the site, and the contractor has invoiced $42,000 to date. That includes all of the mobilization, construction of the roads, clearing the brush, and building of the gates. What we're looking at to do next is now that the brush is cleared, have the engineer that came out. If you'll recall, late last year, the board authorized an expense to do a site survey. There's still some money remaining on that budget, so we are going to ask an engineer to come back out and revise that initial report, given that there's much more visibility on site. So we'll be working on that over the next couple weeks. We have to go through the procurement process and make sure that we're following the state statutes with regard to getting that report updated. If you'll look at the photographs in the memo, the first one that I included for you is the entrance and exit road, you can see at the bottom of the photograph, and then there is the gravel work pad that they've leveled and compacted there. To the right, or excuse me, to the left of that work pad, you can see the trailers, 3 tractor trailers that they are loading the tires into for removal off-site. And then just behind those trailers, that is the staging area where they're bringing tires in from the back of the pile downfield and bringing them up to the entrance for loading into the trailers. Over to the right of the photograph, just to the left of the vehicles, you can barely make out there are 2 lines there. Those are the scales, truck scales, which they use to weigh the tires as they're brought up from the back of the field, and also they're weighing the trucks as they leave, so they can get 2 measures of the tires and the tonnage that they're taking out of there. The next page is a before photograph as the site existed prior to any construction activities, and the photo immediately below that is as of yesterday. This is the work pad, the work site. Towards the bottom right of the photo and towards the upper left, there is the horseshoe-shaped tire pile, and if you'll look closely at that, you can see number one, to the northern edge of the horseshoe, they've removed a good portion of the tires out of the ground and brought those to the front. Of those that are remaining, you can see the fire brakes that they put in between the tires, and that just goes throughout. You can see fire brakes in additional areas as well. The final photo is just an aerial wide shot of the entire site with the work pads and the entrances and exit, or entrance and exit. That's just so you can get a sense of the activities that are going there, and I'll be happy to answer any questions. This is a non-voting item.
So next step on a revised engineering estimate, what would be the timing on that in terms of, and that's kind of securing a better number in terms of total survey of?
Correct. We want to make sure that the previous number is accurate. That's a pretty short flash to bang on that, so we would be looking at.
Is that a technical term, Council?
I don't believe so. We would be looking to have that done within the next month or so. Keep in mind that the overall project timeline is 120 days, and what we're wanting to look at this point now is to get a sense of whether that original estimate is accurate or whether we need to start accounting for any contingencies as far as there perhaps being more than originally estimated. And if so, how are we going to address that without having a fiscal impact on additional fund amounts?
Great.
Scale of that thing is massive,
Yes, it is huge.
so I have no questions. Thank you, Anthony.
Thank you.
Thank you, Mr. Chairman.
That being a non-action item, we could jump to final item on the agenda, number 17.
Bill McLemore, the Loan Deputy Director. This is an information item only. It's your production report through the 3rd quarter of this fiscal year. We're down a little bit from what last year's were. Things have changed a little bit during this year. We had Citibank and replaced by Nation Star and Gateway in terms of program administrators and master servicers that affected us somewhat this year. Land program also has declined slightly. Not sure what we've attributed that to yet. Just demand is not as high as it was last year. Normally our 4th quarter is our best quarter. Starts in about July. And we hope to make up a lot of this production during that final 4th quarter. We're still within 90% of what we projected our goals would be. And again, our best quarter is coming up. Any questions?
No questions here.
No questions at this time.
Thank you, gentlemen.
Thank you. Before we adjourn, just want to recognize Jeff Williford with the senior U.S. Senator of this great state of Texas, Senator John Cornyn's office. Welcome. Love having visitors. Want to thank everybody for their hard work and their diligence during this time of transition for the board as we adopt recommendations from Sunset. And thank you for attention and consideration. There being no further business before the board, the meeting is hereby adjourned.